Canoo has been fined $1.5 million after they overprojected their revenue estimates, so how will this affect the stock, and is the stock still a buy? Keep watching for the next few minutes as we take you through the entire situation as well as other recent news. But before we do that, subscribe to our channel, $1 World, for regular Canoo stock updates. Let's delve into the story of Canoo Inc., an electric vehicle company that recently caught the attention of the U.S. Securities and Exchange Commission, or SEC. The SEC has imposed a substantial fine of $1.5 million on Canoo for what they claim were failures in reporting. These reporting failures are tied to revenue projections that were deemed unreasonable, amounting to hundreds of millions of dollars. The SEC's allegations extend beyond Canoo itself. They also involve the former CEO of the company, Ulrich Kranz, and its former chief financial officer, Paul Balciunas. According to the SEC, these individuals misled investors about Canoo's financial prospects in the lead-up to the company's merger with a special-purpose acquisition company in December 2020. During this merger preparation phase, Canoo had projected impressive revenues of $120 million for 2021 and an even more staggering $250 million for 2022. These projections were based on deals that Canoo had secured to provide engineering services to other companies. The fallout from these inaccuracies was notable. In March 2021, Canoo's stock price plummeted by 21% after the company revealed that it wouldn't be able to meet the anticipated revenue figures, as stated in court papers submitted by the SEC. While Canoo did not formally admit any wrongdoing, the company reached a settlement with the SEC in which they agreed to pay the $1.5 million fine. Likewise, former CEO Ulrich Kranz and former CFO Paul Balciunas settled with the SEC. Kranz agreed to a 3-year ban on serving as an officer or director of public companies, coupled with a $125,000 fine. Balciunas, on the other hand, accepted a 2-year ban, a $50,000 fine, and agreed to return $7,500 in profits. The SEC further alleges that Kranz failed to disclose compensation totaling more than $900,000 that he received from 2 Canoo investors in October 2020, which was intended to retain him within the company. Canoo itself had indicated in May that it had tentatively agreed to pay the $1.5 million penalty as part of the settlement with the SEC. The company had been under investigation by the SEC since April 2021. In a broader context, Canoo's stock trajectory has been noteworthy. The company's stock reached its peak of $20.28 per share around the time of its public debut in December 2020. However, the company's value has declined substantially, trading below $1 per share since February. This case also sheds a light on a trend in the business world. The boom of special-purpose acquisition companies, or SPACs, during 2020 and 2021 brought several companies to the public market, including DraftKings Inc. and electric truck maker Nikola. Nevertheless, this trend also garnered attention from regulators, including the SEC, who raised concerns about the thoroughness of due diligence. As we await Canoo's second quarter results scheduled for August 14th, this narrative underscores the intersection of ambition, regulation, and financial transparency in the corporate landscape. Enjoying the video so far? Be sure to join our Discord community to connect with other like-minded investors. In our previous video, we highlighted the incredible journey of Canoo, an emerging force in the electric vehicle landscape that had garnered significant attention from investors. The noteworthy announcement involving their collaboration with the U.S. Department of Defense served as a testament to their remarkable achievements. This strategic partnership aimed to develop a specialized battery pack to meet military needs, showcasing Canoo's commitment to pushing the boundaries of innovation. Canoo's ambitions extended beyond terrestrial horizons, exemplified by their provision of electric vans to NASA for upcoming lunar missions. One standout feature that distinguished Canoo was their modular electric vehicle platform, enabling the creation of tailor-made EVs for various applications. This approach found success in markets such as commercial deliveries and services. Canoo secured substantial deals, including a significant partnership with Walmart, underscoring their strategic prowess in the industry. However, amid these promising developments, Canoo faced its share of challenges. Financially, the company needed more funding to execute its growth plans. Given the current revenue situation, coupled with notable financial losses, concerns emerged about Canoo's fiscal stability, prompting some investors to divest their stocks. The recent surge in stock prices might be attributed to short sellers, individuals who bet against the company, choosing to cover their positions. This introduced a roller coaster element to the stock's valuation, influenced by news and market sentiment. The video underscored that Canoo's story combined potential and tangible progress. Despite the twists and turns, the excitement surrounding Canoo's innovative designs and substantial partnerships continued to propel them forward. Fast forwarding to the present, let's explore the latest updates about Canoo and assess how their stock is performing amidst the ongoing market frenzy. Taking a closer look at Canoo's stock, represented by the symbol GOEV, reveals a current trading price of $0.6027. The Throughout the day, the stock has shown a fluctuation between its high of $0.6612 and its low of $0.5900, underlining the dynamic nature of the market. Reviewing the past year, Canoo stock has exhibited significant volatility. It reached a peak of $4.3900 on March 8, 2023, and touched a low of $0.4135 on December 20, 2022. The recent trend, as of August 2, 2023, indicates an opening price of $0.6293 and a closing price of $0.6027. Notably, the day's trading volume reached 33.19 million, contributing to a market capitalization of $341.94 million. Unfortunately, the stock has been on a downward trajectory, experiencing a 6.93% decrease in value for the day. This fall aligns with the broader trend that has seen the stock lose over 80% of its value since the beginning of the year. This decline can be attributed to factors including the overall sell-off in growth stocks and concerns about Canoo's financial performance. In summary, Canoo's stock performance reflects its tumultuous journey in the market, with its value swinging amidst market dynamics and investor sentiment. The stock's recent downtrend mirrors broader market trends and uncertainties about the company's financial outlook. For those of you who don't know Uli Kranz, in 2021, Apple enlisted Uli Kranz to contribute to the development of the Apple car. Kranz, recognized for establishing Canoo's self-driving vehicle technology division, boasts 3 decades of experience at BMW. Notably, Canoo continues its operations and is perhaps most renowned for its distinctive lifestyle vehicle, although it's yet to be released to the public. Since Kranz's departure, Canoo has faced challenges in maintaining its financial stability. However, the company achieved a significant milestone by successfully delivering 3 electric vans to NASA last month. These vans are slated to play a vital role in the upcoming Artemis moon missions. They will be responsible for transporting astronauts, flight personnel, and equipment to the launch pad in preparation for the missions. Even with the market acting tough and the bad news surrounding the stock, there are some determined believers in Canoo's stock. These are the stakeholders and the folks who used to be called Twitter users, now known as X users. Despite the stock's recent price drop, they're keeping a positive outlook. In fact, they're looking at this drop as a kind of golden opportunity for new investors to step in. Here's the thinking. With the stock's price being lower right now, it's like a sale. You can get more for your money. And guess what? They're pretty darn sure that at some point, the stock price is going to rise again. So even though things might seem a bit cloudy right now, these Canoo supporters aren't losing faith. They're even suggesting to others that this could be a smart time to consider grabbing some shares while they're on a bit of a discount. To sum this up, while the fine has been an issue for the company, they will surely recover from it soon enough, and in our opinion, GOEV is still a good buy. Remember that this is not financial advice and you should always do your own research and make informed investment decisions. That was all for today. Let us know if you think this stock will make you rich or not in the comment section. Hit like and subscribe to our channel, $1 World, for more such penny stock videos, and we will see you in the next one.